Dubai's property prices are up 60% since 2022. 60% in 4 years. That number should make you nervous, because the last time prices moved that fast, we know exactly what happened next. So today, we're asking the question every investor is quietly Googling at 2 a.m. Is Dubai's real estate market a bubble? And I'm not going to give you a hype answer or a fear answer. I'm going to give you the real one, backed by the actual data, not vibes, not Twitter threads, not recycled 2008 horror stories. By the end of this video, you'll know exactly what's real, what's risky, and what's just noise. Let's start with what's true, because some of this is genuinely alarming. Dubai real estate transactions hit roughly 761 billion dirhams in 2024 alone, a 20% jump from the year before. Prices are still climbing too. Year over year, values are up around 15% heading into 2026. And here's the number that really matters. Developers are delivering over 210,000 new units in the current pipeline. 210,000 units. Flooding into the market. At the same time, prices have already run up 60% since 2022. If you've ever studied a housing bubble anywhere in the world, that combination, rapid price growth plus a massive supply wave, is exactly the setup that should make you pay attention. So, is this it? Is this 2008 happening again in slow motion? Here's where it gets interesting. Because the people who actually study this market, not influencers, but credit rating agencies and institutional analysts, are not calling this a bubble. They're calling it something more specific, a hot market that's due for a cooling phase. And there's real evidence behind that distinction. First, demand isn't fake this time. Dubai added over 200,000 new residents in 2025 alone. Run the math on that. Even at a conservative household size, that's organic demand for roughly 50,000 new homes, before you even count people upgrading or buying second properties. Second, this isn't 2008-style speculation. Back then, prices were rising faster than rents, which is the classic warning sign of a bubble, because it means people are buying purely to flip, not to actually live there or rent it out. Today, rental yields in mid-market areas are sitting around 6 to 8% gross. That's healthy. That's a market still grounded in real income, not just speculation. Third, and this is the big one, the regulations changed. After 2008, Dubai introduced strict escrow laws. Developers can no longer just collect your money and disappear if the market turns. Funds are protected, projects are monitored, and the entire system is far more transparent than it was when the last crash happened. So structurally, this is not the same market that collapsed by 50% overnight. But, and this matters, not a bubble doesn't mean no risk. Here's the actual danger zone according to current market analysis. It's not the whole city, it's specific segments. Mid-market off-plan apartments, the kind being built fast, in bulk, in newer corridors, are the most exposed. Fitch, one of the most conservative ratings agencies in the world, is projecting a moderate correction of up to 15% in parts of this market through the second half of 2026. Why these specific properties? Because that's exactly where the supply wave is landing hardest. When over 200,000 units hit the market, and a big chunk of them are similar apartments in similar areas, basic economics kicks in. Too much supply, prices soften. Meanwhile, villas and established communities are telling a completely different story. Limited land, constrained supply, strong end-user demand, those areas are still seeing 8 to 12% annual growth with no real correction in sight. So the honest picture isn't Dubai property is safe or Dubai property is crashing. It's this. Dubai real estate is splitting into two markets, one that's cooling, one that's still climbing. There's one more factor that could change all of this, and it has nothing to do with construction or interest rates. Geopolitics. Recent regional uncertainty has already started shifting short-term sentiment among investors. Dubai has built its entire reputation on being the stable, neutral safe haven in a volatile region. But if that perception cracks, even temporarily, capital can move fast. That's the wildcard variable that no spreadsheet can fully price in. So let's bring this back to something practical. If you're actually considering buying property in Dubai right now, here's what the data is really telling you. If you're buying a primary residence or a well-located villa in an established community, somewhere land is limited and new competing supply is minimal. The fundamentals support you. Strong population growth, strong end-user demand, and limited new construction in those specific areas all point toward continued, if more moderate, price growth. If you're buying an off-plan apartment in a newer, fast-developing corridor, you need to do one specific thing before you sign anything. Check the handover schedule for that exact community. Not the city, the community. If 10 towers similar to yours are completing construction in the same 18-month window, that's exactly where price softening is most likely to hit. And if you're financing with a mortgage, model your numbers conservatively. Don't assume rental income will always perfectly cover your payments. Build in a vacancy buffer. Understand whether you're on a fixed or variable rate, and what happens to your payment if rates move against you. None of this requires panic. It requires the same thing serious investors do in any market, anywhere in the world. Look past the headline number and study the specific asset you're actually buying. So, bubble or not? Based on the actual data, Dubai is not in a structural housing bubble. The demand is real, the regulations are real, and the comparison to 2008 doesn't hold up under scrutiny. But it is a late-cycle market, which means a correction, particularly in oversupplied mid-market apartments, isn't just possible, it's the base case expectation among serious analysts for 2026 through 2028. If you're buying a well-located villa with limited competing supply, you're probably fine. If you're buying an off-plan apartment in a corridor where 10 other towers are finishing construction at the same time, that's where you need to slow down and actually look at the handover schedule before you sign anything. The headline isn't "Dubai is about to crash." The headline is "Dubai is maturing." And maturing markets correct in specific places, not all at once. Dubai's real estate story isn't about to repeat 2008, but it's also not the guaranteed, can't-lose investment some people are selling you online. The truth, as usual, is in the details: which segment, which location, which timeline, and how the deal is actually financed. If this video helped you actually understand the risk instead of just reacting to headlines, subscribe to Dubai Decoded. We break down the real numbers behind the world's most ambitious city. No hype, no fear, just the truth. See you in the next one.